think with that, I want to welcome today's speaker, Kelly Campbell. Kelly is the director for the Colorado Fair Plan, and if you haven't heard of that, that does stand for Fair Access to Insurance Requirements. This is a state-backed insurance program designed to provide coverage for homeowners who can't get insurance coverage through the traditional means, particularly in high-risk areas. She's going to give us the overview of this plan. And like I said, we're going to follow up with Q&A. So be thinking, be writing those down so we can have a nice lively discussion and hear from a few people. Kelly, whenever you're ready, the floor is yours.
Great. Thanks, Laura. It's great to be here today. Really appreciate it. I'm just going to do very high level, a little bit of background on the plan, how it came to be, talk just very high level about the type of coverage the plan provides. And then I'll go ahead and share my screen and hop on the website and just show a few resources to step through some of those details. So hopefully, so that's a resource that you can use. I thought rather than giving PowerPoint slides, it's actually helpful to see the resources that are available and how to use them and how to access some of that information, especially in case you get questions. So just very high level how the FAIR Plan came to be. Across the country, there were 37 other FAIR Plans. That doesn't mean that 37 states had FAIR Plans because there are some states that have two, especially in the coastal states. They have a wind pool as well as a FAIR Plan. So they have one entity that covers risk by peril or by cause of loss, such as kind of wind, water, hurricane, that type of thing, and then one that covers the rest of the state. Texas is a great example of that. It has TWIA, their wind pool, which is along the coast, then it has their FAIR Plan that covers inland. So the larger point to that being that there are a number of states that have FAIR Plans. It's something that is very common across the country. However, it is slightly less common on the western side of the United States. There are a number of states through the center of the United States that don't have FAIR Plans, and Colorado was one of those states. And then in 2023, the legislature passed House Bill 1288 in order to create the FAIR Plan. That legislation was signed in May of 2023. The governor seated the board in January of 2024. I was hired on in June 2024. We began accepting residential applications on April 10th, and we began accepting commercial applications last Thursday on July 17th. So we do write homes as well as businesses. Under that commercial heading also includes like master HOAs. So not the individual units, but the actual master policies for the multiple buildings that may exist in condo units. So it is a pretty broad commercial program that we have under the FAIR Plan. However, the FAIR Plan really is intended to be that insurance of last resort, that safety net. So it only provides basic property coverage. It does not provide as robust a benefit as your traditional insurance product. And I'll talk through a little bit of that when we get into the website. But very high level, our limits of coverage under a residential property at $750,000. On a commercial policy, it's $5 million. And so I do. Too much. Sorry, Laura. I was trying to see it pop up on the chat.
I did not mean to distract the speaker.
No, that's okay. That's okay. So I wanted to make sure there weren't any questions, especially when I'm talking a lot of insurance jargon. I always try and make sure that folks are that I'm not unintentionally using insurance lingo and not helping to give people the information that I intend to. So I always try and be a little sensitive to the chat. So I apologize. The limits, as I mentioned, are $750,000 for residential, $5 million for commercial. We provide what is known as an actual cash value policy. I think this is a really important piece to understand. The FAIR Plan does not provide replacement cost coverage. So what we provide is an actual cash value. So that's in essence kind of the value of your property as it stands, not necessarily the cost to replace it. So when you think of your home, there are elements of your home that do depreciate. So for example, kitchen appliances, your roof, carpeting, contents, those kinds of things do depreciate. And so the actual cash value coverage does reflect those elements that depreciate within your home. whereas a replacement cost policy actually covers to replace those elements. So it's a really important distinction. So it is generally less coverage. The other component of that, when you have a replacement cost policy, there are also some kind of built-in buffers for things like inflation, because again, you're rebuilding that property. So things like extended replacement cost or additional coverages, particularly when you have that demand surge after a large fire, after a large catastrophe, that type of coverage is not included in a fair plan policy. You also do not have law and ordinance coverage. So any additional expenses as a result of rebuilding your home up to new codes, such as a wildfire resiliency code, that is not covered also under a fair plan policy. In addition, things like additional living expenses, that also does not, those coverages don't exist on your basic fair plan policy. So I'll show you some charts on the website. But I think then there's naturally that raises a lot of questions like, is it possible to get some of those coverages? What do folks do if all they can get is a fair plan policy? We are starting to see some policies known as DIC policies, or difference in conditions, difference in coverage, wraparound policies. They kind of come in a lot of different names. But generally, those policies do provide some of those additional coverages. So things that aren't covered under a fair plan policy, such as water damage, theft, liability, those things can be covered under that DIC policy. You can also get some additional living expenses. Some DIC policies do have that. So it is really important to work with an agent to get a fair plan policy. By statute, any individual who wants a fair plan policy does have to work with a licensed agent, but any licensed agent can write a fair plan policy. So, it's not like, some of those insurance company names that you're familiar with, where if you want to get a product from a specific company, you have to go to an agent that sells that company. Any agent in Colorado can write a fair plan policy. So we want to make sure that we are as accessible to people as possible. But because we provide coverage that is just different than what most folks are used to, and particularly because these are generally customers that are having a hard time getting insurance, it's really important that they work with an insurance professional to really understand the insurance marketplace and landscape to make sure that they're getting the best coverage under their individual circumstances. So that's a very high level of the overview of the FAIR plan. I'm going to share my screen now and walk you through a few resources, get you familiar with the website, but then I do want to provide an opportunity for questions, to make sure that anyone has an opportunity to ask any of those questions. So let me just share my screen here. All right, so here is the Colorado Fair Plan website. So as you can see here, we are the last resort coverage. We really want to make sure that people understand that we are here when standard insurance isn't available, but we want to make sure that before you come to the Fair Plan that you have exhausted all other options. We have a great little video here that gives an overview of the Fair Plan, just to help give some of that basic information and help to underscore some of those key points for folks. So again, who is the Fair Plan for? Again, it's those high risk areas and people that can't get coverage anywhere else. I think another component is there's a lot of conversations in Colorado, not just about the availability of insurance, but also the affordability of insurance. I want to be clear that the Colorado Fair Plan really was designed to address availability, not necessarily affordability. So by statute, the Colorado Fair Plan must have actuarially sound rates. So as a result, the cost of a Fair Plan policy does represent the high risk nature of the properties that it insures. So it may not necessarily be your most affordable option, but it is some level of coverage. We have very limited underwriting guidelines. In essence, if your property is habitable, chances are you qualify for coverage under the FAIR plan. So it really is our goal, again, to make sure that coverage is available to folks. So just to look a little bit at what resources we have. So on the consumer resource page, we do have, kind of some information about eligibility. Again, this is a lot of what I've covered. You do have to have 3 declinations by standard carriers, those insurance companies whose names you're likely all familiar with. And those declinations do have to be within the last 45 days in order to qualify for coverage. This is just this is more of a narrative overview of the basics of a fair plan policy. We also have other resources that try and highlight what those coverages are. I want to show that. Then I'll show some of the agent pieces. But here's a nice policy comparison chart, which I do think is a really helpful tool. We really tried to break down some of these key areas: eligibility, coverage, perils or what causes the damage, liability coverage, flood and water. Really tried to break it down and show the difference between coverages that are available on the standard market and coverages that are available under the FAIR plan. So, sorry, having to do some navigating here. Also, under our consumer resources, we do have some basic wildfire mitigation. We have these. We have borrowed some materials from Wildfire Partners, so our friends from Boulder. We have used some of those materials just to help give some good basic information about wildfire mitigation and make sure that that's available for folks. So in addition to some of these policy resources, also we do have sample policies. So in case anyone needs any light reading before bed to help them sleep, we do have a dwelling policy. We also have a commercial policy, just so to make sure that we have full transparency and people really are able to access what a fair plan policy looks like and reads like. But as I mentioned, really the critical conduit for the FAIR plan are our agency partners. Again, any licensed agent can write in the FAIR plan, but I think it's really important for consumers to be able to find an agent who is registered to write in a FAIR plan. So if you know of someone who's having a hard time getting insurance, this is a great place to direct them and have them do an agent search. As you can see here, these are all the pins of all the people that are registered. So again, any licensed producer, and you don't have to live in Colorado, you just have to be licensed to sell insurance in Colorado. So as you can see, we do have a lot of out-of-state agents. So, for example, if you have someone that lives in Texas and owns property in Colorado, they can access the FAIR plan. So as long as the property is here in Colorado, they can access the FAIR plan. But if you want to search, you can go ahead, go into our search tool. There's a lot of different ways you can search. This happens to be a regional filter. So you can look there. You can look in kind of the kind of central mountain area. And there you can see some of these agents. You'll see down below, here's where all their information is listed. This is a randomized list. It changes every time. So because again, we don't appoint agents. So these are folks that have chosen to register with the FAIR plan. But all of these individuals are registered with the FAIR plan currently. Speaking of agents, we do have resources specific to agents. We do have some of it looks much the same. Here's the agent registration process. Here's how a producer registers. They can use the links on this particular page here. Sorry about that. Sometimes navigating and talking has its own challenges. There are resources available to consumers. Some of these are going to look very similar to some of the resources that are available on the consumer page here. Some of these will look familiar, such as that policy comparison chart, and the sample dwelling policy. Those resources are the same. We do have a webinar that we have on here for the binding process for agents. So have some of that information. The other piece that we have available on the agent site right now, because we just launched our commercial product, we do have a commercial specific page for agents that is up and available. a lot of this has to do with the actual process of submitting the applications to make sure that they understand that process. It is a little different in commercial than it is in personal lines, but we will be updating our consumer commercial page this week. So you'll start to see some more commercial resources geared to consumers on that page this week. So it's all, as I have said many times, we are building the airplane as we're flying. So we do have some course corrections while in flight. This is one of them, is making sure we get that consumer page, that consumer commercial page up. So that is a very quick overview of the Colorado Fair Plan. Again, wanted to give high level, wanted to give that those website resources that are available. But more importantly, I would like to get questions from all of you. And again, we want to be a resource that's available to you. If you think of things that should be on the website that aren't, we welcome that feedback. But hopefully, truthfully, hopefully this is a product and a resource that most people don't have to use. But if there are people that need it, we are very happy to be here for them to make sure that they have access to at least some basic coverage.
Cool, Kelly, thank you so much. If people do have questions, you can either raise your hand and ask them live and have a conversation live. You can also put them over in the chat and I can read those for you. And I guess I'll get in line because Lisa's ready with her question. I have a few too. Go ahead, Lisa.
Well, hi, Kelly. It's so nice to see you again.
Hi, Lisa.
We were just on a webinar together recently. Anyway, I just I wanted to point out one thing, and I thank you for your presentation. Just to emphasize, since this is like a largely fire-related group of people, I just wanted to make sure that people understand that this is a policy only for fire and wind. It does not include hail. Is that correct?
It does, Lisa. It includes
Now it
hail.
does include hail?
It's always included hail. Extended coverages includes coverage for wind and hail.
Oh,
Mhm.
I thought it didn't include
Yep.
hail. Okay, never mind. Never
Yep.
mind. And then for difference in commission policies, so were you saying that those are available now or will be?
So there is one difference in conditions policy that has been available since we started.
Okay.
And actually I just had a meeting with another entity today that is looking at bringing a difference in conditions. So we're starting to hear from a few other entities that are interested in bringing some of those products to market. You know, it's a little bit of a chicken and the egg. They want to make sure that there's a marketplace, that in fact people need DIC products before they bring them to market. So we've been doing what we can to reach out to some of those carriers, both admitted and excess and surplus lines, to say, hey, are you interested? Would you like? We want to be helpful to you. So we are working on trying to get more of those products onto the market. We absolutely believe it is critical to have DIC products available to people.
Great, good, Steve.
Yeah, thanks so much, Kelly. So simple question perhaps, is the state of Colorado the carrier, or are there carriers that participate in this program?
So the Colorado Fair Plan, by statute, is an association. All of our members of our association are insurance companies. If you are an admitted insurance carrier in Colorado, you are by statute you are mandated to be a part of our association. So it is an involuntary association, but it is fully funded by the private insurance market.
Okay, cool. Thanks for that.
No, great question.
Good, Molly.
Hey, Kelly. Thanks so
Hi,
much.
Molly.
Good to see you. And thanks so much for the overview. It was really helpful. And I think my question was actually along the lines of Steve's question. I was just thinking a lot about the California context and the situation they're in, especially after the LA fires, and it sounds like just being with so many people now in California being on their state fair plan, how our state in Colorado has maybe avoided some of those potential pitfalls with so many people oversubscribing. And I know it's really new. I'm just curious how many people you've seen have interest or signing
Yeah.
up. It sounds like the insurers are really the ones that take responsibility for the costs if there is a big disaster. So I was just kind of curious about some of the more mechanics at the state level.
Yeah, no, those are great questions, Molly. And so, I think there's few key differences that are important to point out is, and I think, it's natural to make a lot of comparisons between Colorado and California. I think we were, especially in the wildfire context, doing it before, and then after the fires earlier this year, especially with the FAIR Plan coming on board and seeing all the headlines about the California FAIR Plan, I think we've seen even more of those questions. But there are some really critical differences in Colorado that I think are very important. Now, I will say we are starting to see more applications. So I think as agents are getting more familiar with the program, we're starting to see more applications. But right now we only have about 35 policies. So we definitely are not being overrun. Now, I don't know what we're going to get in the commercial space, but I think what we saw in the dwelling space is, agents, to their credit, really spent time to become familiar with the product, what it is, what it isn't. There are, even though we have limited DIC options, there are a lot of agents that were going out at least to make sure they could get a complying liability policy to go with it and things. So I think agents have worked really hard to make sure that they really are meeting the needs of their customers, which is great. So again, we're there as the safety net, but I think we're really seeing agents do a lot of really good due diligence. And what I think, and this is where the distinction between Colorado and California comes in, I think, is in Colorado, well, it has been difficult to see all the rate increases that we have seen in Colorado. And I think that's been really difficult for a lot of households. And I understand that the positive side of that is I think that has kept more carriers in the marketplace. We aren't seeing, carriers completely pull out or completely non-renew a book of business in Colorado. So there might be areas where it's more difficult, but we aren't seeing companies completely take their footprint away from the state, and that's important. I think the other element of it is that because of that too, we're seeing more engagement in the excess and surplus lines market. So those are insurance carriers that aren't regulated the same way as the standard insurance market, but they often provide products that are very similar to standard products. And so again, the huge value of having consumers work with a licensed producer is they then have access to the standard market, to the excess and surplus lines market, and us. So they have a few more market choices more broadly in Colorado than they have in California. So that's a key difference. And then the kind of the final component is, again, by statute, our rates have to be actuarially sound. Our rates also have to include the complete cost of reinsurance. That is a key distinction from California. California cannot include the cost of reinsurance in their rates. So what we have done to try and protect the Colorado FAIR Plan, we have purchased a reinsurance tower. So that reinsurance tower is intended to ensure our financial stability without putting additional pressure on the marketplace by needing to go out to them and get more money from them in case of a disaster. We've got a reinsurance tower that can grow with us. So as our exposure increases, our reinsurance tower can increase. And also, I can say our biggest operating expense is reinsurance. So being able to include that in our rates also ensures that our rates aren't artificially low, and then perhaps kind of too attractive, right? Like we want to be here if we need it, but we don't want people coming to us that really should be somewhere else and can get better coverage somewhere else. So it's a tricky balance, but that's a really important component. That's a key difference, and it's very insurance in the weeds to start talking about reinsurance, but it is a critical difference between us and California.
Yeah, no, that's really great. And thanks for getting into those differences, because certainly it is, I think, a valid question for anyone thinking about, well, what's the long-term sustainability. So.
Absolutely. Yes. And we really have tried to build the FAIR Plan with long-term sustainability in mind, particularly knowing that it's the job of a FAIR Plan to be able to expand and contract and really meet those market challenges. the good news for us being the first FAIR plan in a generation, most FAIR plans were started in the 60s and 70s. Starting now, we have technology that we can leverage. There's a lot of different things that we can leverage to ensure our financial stability and our ability to scale up or scale down as needed by the marketplace. So we do have, from that perspective, we have had the opportunity to learn from other FAIR plans and take advantage of that technology when we've built the structure of the Colorado FAIR plan.
Thank you.
Steve, go ahead.
Yeah, no, thanks. That's a great answer. I guess my question is, although we haven't seen any carriers pull out yet,
Yep.
The trajectory that we're seeing here in the city is that there are some people there's more and more people that aren't getting renewed. Can you predict the future? Just kind of looking forward, the trajectory, how are you accounting for the potential of all those kind of changes, as I'm sure these carriers are facing billions upon billions of dollars of claims here shortly?
Yeah, no, I mean, Steve, it's a really thoughtful question. And I think, unfortunately, I think the property insurance challenges that we're seeing sadly are not unique to Colorado. We're really seeing it across the country. And so, so I think your point about carriers being under stress is valid. It's absolutely true. And some of that is specific to Colorado, some of that is broader. And so I think, that was the idea in mind of creating a FAIR plan, I think, is because we don't unfortunately have that crystal ball. We don't know what's going to happen. By having a FAIR plan, we're making sure that we do at least have that safety net so that way consumers aren't, they have some protections regardless of the volatility of the market. And so, we understand that that's our mission at the FAIR plan. We take that mission really seriously. So again, that's why we want to make sure that we have that scalable infrastructure. So, if the worst case scenario happens, that we're there, we're ready, we're prepared. And if things really take a turn and we start to see improvement, we see inflation slow down, costs going down, we see less pressure in the reinsurance market, we see things really start to trend in the right directions, insurers increase their appetite, and we aren't needed, that's great too.
Thank you.
Yeah, I'll hop in with one. Just a reminder, everyone, even if you don't want to say yours aloud, they can go in the chat. I'm curious if there's like any home ignition zone expectations for being in the FAIR plan, and will there be any incentivizing people to get their home ignition work done so that they can get back into the private insurance market?
So yeah, no, great question. And there are some folks that are on this call that I've had some conversations with about mitigation and how mitigation is going to tie into the FAIR plan. Obviously, our first goal was to get up and running, but mitigation is a keen interest area for me. I think it's vitally important. I see mitigation as the conduit for people from the FAIR plan back into the private insurance market. That's where we want them. We want them in the standard market, and mitigation is key to that. So, but as I mentioned, we do have very limited underwriting guidelines. We do have wildfire mitigation questions as part of our application process. It is something that we look for when we inspect homes, but it isn't necessarily something you're going to be declined coverage on. But we really see the FAIR plan as an opportunity to educate people about mitigation. Also, that was very much top of mind when we selected some of the vendors that we worked with. So, Steve, when I talked about being able to leverage some of the technology that's available today, that was one of the things we did. We currently partner with Zesty, and they do have a 2-level scoring process, a community level as well as a location level. And for individuals on their location level score, they are given the top 3 reasons that they were given the score that they were. So those are often related to mitigation. I mean, sometimes it may be things that they can't change, the slope, that kind of thing, but oftentimes it is vegetation. It is some of those elements, particularly in IBHS, that are identified by IBHS. Zesty does use the IBHS guidelines. So that is a good opportunity to educate folks about things that they can do to their property to overall reduce that risk and hopefully make them more suitable for the standard market.
Cool. We'll look forward to more on that. That's pretty interesting.
Yes.
Any more questions for lovely Kelly Campbell? From Stacy, is there a discussion to raise that initial limit for residents, or are you guys going to stay around the 750,000 range?
Yeah, I think that there's a lot of conversations about what is the right spot to meet the market needs in Colorado. And those are conversations that we are very open to. We are intended to be marketplace solutions, and, and we want to make sure that we are really looking at Colorado and what Colorado needs. Our mission has been to build the FAIR plan that Colorado needs. When you look at FAIR plans, if you've looked at one FAIR plan, you've looked at one FAIR plan. Each FAIR plan is as unique as the states they represent. And so what we did to start is we tried to look at what the limits are across the country, what do the vast majority of FAIR plan policies look like, and that's really what we built that initial statute from. Do I think it's perfect? No. Do I think there will be changes? Yes. Exactly what those changes are, I think, I don't know exactly what they will be, but I do think that there will be conversations about a lot of different elements of how the FAIR plan is structured. So I think it's very possible there will be conversations about that $750,000 limit. Now, I do want to say too, is that $750,000 limit that is for the ACV coverage. So that if you have a property that is, market value is 850,000, and so ACV is less than that, then we would still accept that property. And actually, we would accept a property of 2 million. It's just the most we would pay is 750,000. So the 750,000 is a limitation on coverage, but isn't necessarily a limitation on what we will accept in the FAIR plan. And I know that feels like a distinction without a difference, but there are circumstances in which an individual may be able to get coverage up to that full amount from another carrier. So it is an important distinction. And Colorado is fairly unique in how we built the FAIR plan by allowing for that $750,000 to be a first layer of coverage. So, but that was a really long answer. And honestly, the shorter answer is yes, that conversation is happening to potentially, is 750 the right limit? I don't know what the answer is ultimately going to be. And I can assure you that we are continuing to have conversations about, what are the market needs in Colorado? Does the FAIR plan meet them? If so, why not? And what are all the different avenues to be able to meet those market needs? Is it the FAIR plan? Is it something else? Let's take a look at everything holistically.
Well, Kelly, I don't know that I fully understood that idea about like the first layer of coverage and being able to use another carrier. So I appreciated the long answer because
Okay.
somehow that didn't click for me till just now. Cool. I'll wait another minute, see if we have any more questions. Thank you, Stacy from Eagle County.
Yes, absolutely. Certainly appreciate that, Stacy. We know that there are areas with those high value homes. And so those are part of our conversations.
All right, awesome. Kelly, you're not going to be able to hang out for breakouts, right? You've got to run off.
No, I am so sorry. Actually, I have to go put on my other hat as a Wildfire Resiliency Code Board member, and I have to go attend a meeting at 2. So I have to drive over to that. But so thank you for accommodating my schedule, and thank you for letting me wear all my hats today. I really appreciate it. But if anyone has questions, I would be happy to answer any questions offline too.
Cool. Maybe just put your contact stuff in the chat. And thank you so much for the different hats you wear and all the support you do for members of this community.